Welcome to Looking at the Markets with David Modell. Today we're going to talk about intra-day trading using pivot points. So let's talk about that. You can use the previous day's high, low, and close to calculate a pivot point for the current trading day. Just add the previous day's high, low, and close, and then divide by 3. That's the pivot point, and you can use it as the primary support or resistance level for the trading day. After you have calculated the pivot point for the day, and you can do that before the market opens in the morning, next you can calculate more support and resistance points for that day. You can calculate 2 more support points and 2 more resistance points with some basic formulas. And actually, I've seen people calculate 3 more support points and 3 more resistance points, but we're going to keep it simple with just 2 of each instead of 3. So let's look at the formulas. Okay, so before the beginning of the trading day, what you're going to do is first you're going to calculate P, the pivot point, and we talked about that. It's just an average, okay? You're going to take the average of the previous day's high price, low of the day, and closing price. All right, the high of the day, the low of the day, and the close of the day for the previous trading day. You take the average, so you add those 3 numbers up, and then after that you divide by 3. That's the pivot point. That is your main or primary support and resistance for the day. After that, you take that number and you're going to make some more calculations. First, you're going to calculate support 1, S1. So you take that number, that pivot point number, multiply by 2, and then you take that number and you subtract the high, and that's the high of the previous trading day. Then to get support 2, or S2, you take that pivot point. Okay, well first, remember you want to do what's in parentheses first. So you take the previous day's high price and low price, subtract, okay, and then subtract that number from the pivot point that you got earlier. Now you want to get your resistance 1 and resistance 2. So to get R1, resistance 1, you take the pivot point that you calculated earlier, multiply by 2, and then take that number and subtract the low price of the previous trading day. And then finally, to get R2, and that's your second resistance, resistance 2, you take, well, you want to do what's in parentheses first, so take the high minus the low of the previous trading day, okay, and then add that number to P, the pivot point that you calculated earlier. I know that seems like a lot of work, but that's how you do it. And here's what it looks like. All right, this is just an example. Now here's the beginning of the trading day, okay, and these are all 5-minute candles because this method is for day trading. And notice that once the trading day starts, that the support and resistance levels, they all change. In this case, they all shifted downwards based on the previous day's high, low, and closing prices. So every day they're going to change. All right, so this line here in the middle, that's P, the pivot point, and you've got your resistance 1 a little bit above the pivot, and then resistance 2 a little bit higher. And you've got your support 1 a little bit below the pivot, and support 2 even lower than that. All right, and these numbers are only good for that trading day until 4 o'clock p.m. Eastern Time. All right, and then the next day, all these lines might shift upward or downward depending on the new calculations for the new trading day. These pivot points must be recalculated for each new trading day using the previous day's high, low, and closing numbers. Now to make it easier, you can Google pivot point calculator to find online tools to do the calculations for you. So perhaps every morning, or you could even do it in the evening. Use the previous, the night before, for example. You can just Google pivot point calculator and find a reliable pivot point calculator, type in the numbers, the previous trading day's high, low, and close, and usually it will calculate it for you. Now please note that this method is not perfect, and you must use your own judgment when executing any trade. Alright, so this video is not a recommendation to use any method or to buy or sell anything. You have to use your own judgment. Now if the current price, okay, so how do you use this during the trading day once you've calculated all the numbers? Well, if the current price, or the current candlestick if you're on the 5-minute chart, if the current price breaks above P, the pivot, with conviction, that could be a buy signal. So that's bullish. You could set your initial profit target at R1 and your stop loss at S1. Now what if it keeps going up above R1 though? Okay, well if it keeps going up fast and breaks above R1 with conviction, and the conviction means it's going up fast. Alright, and also you want to look at the volume. If there's plenty of volume behind that up move, that's even better. That's more conviction. So if it keeps going up fast and if it breaks above R1 with conviction, you could set R2 as your profit target and your stop loss at P, the pivot point. Now what about bearish signals? Well, if the current price, or the current candlestick on the 5-minute chart, breaks below P, the pivot, with conviction, again if it's going down fast and also the volume is there, that could be a short signal. You could set your initial profit target at S1 and your stop loss at R1. Now what if it keeps going down even faster? Well, if it keeps going down fast and breaks below S1 with conviction, you could set S2 as your profit target and your stop loss at P, the pivot point. So let's see what that looks like. We're back at this chart again. So if the price broke above P, the pivot, with conviction, then you could set R1, the first resistance line, as your profit target. And you could set S1, the first support line, as your stop loss. Alright, now if it goes up to R1 and just starts to go sideways or starts to turn around and go down a little bit, you can take profits. But what if it just keeps shooting up and there's plenty of volume and it's just a big green candle above R1? Well, you don't have to take profits there. Why not let your winners run? And now you can make R2 as your profit target, and R1, I'm sorry, I apologize, P is now your stop loss. Okay? So it's gone above R1 with conviction, so now P is your stop loss and R2 is your profit target. And if it gets up to R2, you can take profits. Now some people put an R3 on their chart, and you can look up the formula for that, or use just Google, use Google to find an online calculator. And if you want to make this more complex, you can put an R3 and an S3 down here on your chart if you want to, or you can keep it simple just using R1 and R2. Alright, so what if it breaks below P with conviction, below the pivot point for the day? Well, you can use S1 as your profit target for your short position, and R1 is your stop loss. And if it goes down here and starts to go sideways or go back up, you can just take profits. What if it shoots below here, a big red candle going fast with plenty of volume? Well, you can let your winners run again. You can change your profit target to S2 and change your stop loss to P, the original pivot. Now some traders prefer to avoid trading during the first half hour of the trading day because it is so volatile. Alright, it's kind of unpredictable. And that's what some people do. However, some pivot point traders feel that the pivot points are more reliable at the beginning of the trading day and become less reliable towards the end of the day. So that's something for you to think about as to whether you want to use these pivot points in the first half hour of the trading day. Some people feel that these signals are more reliable toward the beginning of the day and become less reliable as the day progresses. So I hope this was a helpful introduction to you for pivot point trading. Please give this video a thumbs up on YouTube and leave comments, and please subscribe to my YouTube channel so you can receive the latest updates on my financial educational videos. And if you want to contact me because you might have questions about trading, investing, using indicators such as this one, or putting together a trading or investing plan because you really need to have one, you can email me anytime. My email address is davidmodell@gmail.com. Thank you so much for watching and listening, and I'll talk to you again soon.
It's different now.